We highlighted when you first chipped the wire on the main pattern, but actually we were already in long leveraged and you're stopped there. And the gain is up to $330. That's a huge, huge move. This is, as I say, a very big time frame view. And so we're talking global probable depression. It's a heck of a thing. Gold is the antithesis of all of that. The anti-dollar, the anti-fiat trade is the purchase of gold. The anti-debt is the purchase of gold. They go hand to hand, as I said, the Siamese twins of fiat and debt. Gold is that trade that is the big winner. And as it stands and moves, so its sisters and siblings will move like silver and platinum amongst them. And that's where we are, and it is a debt-based collapse.
The entire global financial architecture built on fiat currency and catastrophic debt is collapsing. This is the stark warning from seasoned market expert FrancisHunt. He's not talking about a simple recession, but predicting a systemic reset. While the US, as the dominant but most debt-burdened superpower, is set to fall the hardest. Hunt sees this collapse spreading like wildfire through Europe, the UK, and ultimately across the entire world. Moreover, Hunt sees silver on track for a historic breakout, with long-term targets near $330. While gold remains the anchor, silver's volatility and industrial demand have delivered bigger gains in recent years. In his outlook, FrancisHunt argues that today's stock market highs are an illusion. He notes equities truly peaked in 1999, when gold was $256 an ounce, and since then, markets have been losing ground against gold. Hunt emphasizes that gold is the ultimate anti-dollar, the anti-fiat, and the anti-debt trade. According to data from goldprice.org, between September 2005 and September 2025, the price of gold in dollars has risen by 707%. This explains why more and more savers are turning to this asset as a refuge from economic instability. The S&P 500 index has also grown strongly over the last 20 years, but with greater volatility and sharp declines. Gold, on the other hand, has maintained a more stable trend. Amid the Nvidia hype, Hunt insists the Dow, S&P, and Nasdaq are all eroding in gold terms. For traders, FrancisHunt advises caution against chasing leverage at this stage, while physical stackers to continue accumulating precious metals. Before we dive into FrancisHunt's sharp insights from their latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
The main trade is the financial system is based on a debt fiat. It's the foundation system, and it's in collapse. And it's not just in collapse in America, as you pointed out, but it is, unfortunately for Americans, the privilege of the hegemon also means you fall from a higher stepladder when it comes to that. So everybody will be hurt, and America will be hurt badly, probably the worst, but Europe is not going to be far behind, neither the UK. It's particularly the Western world. And then even the rest of the world that isn't in the Western world will be affected by a major buyer's disappearing, and so we're talking global probable depression, and you have to survive that. You have to survive that when that happens, and it's a heck of a thing. But gold is the antithesis of all of that. The anti-dollar, the anti-fiat trade is the purchase of gold. The anti-debt is the purchase of gold. They go hand to hand, as I said, the Siamese twins of fiat and debt, gold is that trade that is the big winner. And as it stands and moves, so its sisters and siblings will move like silver and platinum amongst them. And that's where we are, and it is a debt-based collapse. So don't get sucked into one of the narratives that say, well, trying to trade a blow-off in stocks. In gold ounces, both the Nasdaq and the S&P and the Dow Jones are down despite making nominal new highs since the trade tariff collapse. And in fact, the final high, and it might be worth the chart share just to put a proper nail in this vampire's heart and put an end to, that story, properly put Dracula to death on that one, is if we take and do the very charts for you. Let's take the Dow Jones Industrial, for example. It's a popular one. Everyone will say, yeah, but all-time highs, all this narrative. Everything should be measured in gold ounces in a fiat repressional collapse period. There is no sound money when they're all in the fiat system. And that's what you have. The high for the equity market culture is here. That was peak equity. 1999 was peak equity. We're talking a localized high previous to the current stock market's highs that you're making now. That was gold at 256 ounces and the NASDAQ.com boom. You corrected substantially there, and we started to have gold at 1,000. Then gold slowed down a little bit, it went right up to 1927 at this point. Then it came back down a little bit and they reflated a bit of a NASDAQ bubble. As you can see, I have an inverted setup structure for downside here, which is saying in gold ounces, the Dow Jones is heading down. And it's the same for the S&P and the NASDAQ, despite NVIDIA, despite all the things you say. So stay with the core winner, because everything is a monkey on a grease pole sliding down. And it might number go up, but in real terms, it's monkey go down, because I'm kind of the charts guy. It's what everybody who comes to expect. We trackers, and we read the footprints in the sand, basically. That's our primary goal. So we just had an amazing run. Our community and I were aggressively leveraged long here. So we are investors, but we also try add a bit of extra spice on that by getting leverage long. And we got leverage long in and around the 3340s, 3350s, 3360s with multiple entries. And you have just made a key technical target for us at the 3,769. This is our bespoke favorite setup. It's called the HVF setup. It's a squeeze in volatility. It's the Hunt volatility funnel method. And this is what we love to trade. And in bull markets, you consistently get them. So it's a very useful way to turbocharge your stacking, providing you can implement safely with real stop losses and the hyper over symmetric, the asymmetric gains, you accelerate your ability to stack. And this has got a lot of our community members who are banking over 6 digits, 1 or 2 more. Others at lower levels are making just good profits for the first time in trading. I'll just highlight. So here was the run. You made our interim target there. That's your point of rest. You got a red candle there and a pullback. Then you went into this broadening structure. Many people see that as weakness. And in actual fact, when you are inside an HVF play zone, which is that after this triggering point on the green line and waiting for target, it's actually bullish. You popped out the top, and now you've done that. And these two candles, a little bit of a wick sell here, you can see back down. And we've got a red candle also with an upper wick sell. So a little bit more sideways and possibly down now for a spell before opportunity. So if you were just about to put $1 million into miners, you might get them priced a tad cheaper if you're patient. But don't stop getting those miners. Don't stop getting that gold, silver, and platinum. But from a timing perspective now, we've just done. We expect progress decay. That's what a target's meant to be, a localized high where you get a rest and a little bit of pullback. And you often create new structure. So an example of what could happen, it's just one of many. It's not a prediction, by the way. You could come down a bit. You could swing about a bit, you could come down a bit, you could calm down, and then some data comes out, and then you go again. So for those that are stackers with physical, there's no action to take. For people that are more trading with CFDs and things like that, you might want to bear a bit of awareness to that. Also, everybody's become super bearish the dollar, and we were too, and we were right to be, but there's sign that the dollar against the other fiats and even here on gold will have a little bit of pushback. I'll just highlight the monthly. You can see how the dollar has underperformed relative to the euro, another failed fiat, of course. Let me just remove that. Sorry, that box. We don't need that. It's jumped on. You can see how you've had over the last few months. I mean, literally, this is January, February, March, April, May, June, July, August. I think I started, that should be January, so forgive me, I started one after. So we're in the September month now, but you can see we've sold off there. And that's a little bit like a shooting star. And most of these were big, stretchy upside candles with deval of the dollar, up valuation of the euro, which has all of the same problems in many senses. A lot of people are more familiar with the Dixie, which is actually the same thing but upside down a little bit. It has a bit of Japanese yen, Swiss franc, and Swedish krona in it to small degrees, but it's 52% still the euro. And you've had a little bit of a reversal after making a marginally lower low and coming back up. It's too much. It's only one swallow. We don't call a spring or a summer on that. But this was very capitulative. And there's a possibility that, a little bit of a rally and a little bit of comeback of the dollar might be on the cards, because a lot of the other trading nations that have surpluses to the dollar, mainly China and the Eurozone, you would have had quite a lot of a correction on importers with a combination of the tariffs and the currency effect already. And they'll be squeaking about currency manipulation soon if the dollar continues to go down and they can't sell to any meaningful level anymore. So that's a kind of small time frame, medium time frame, technical perspective. It's not the time to rush in and get leverage long now that everybody's super excited about it.
Based on fundamentals, FrancisHunt argues that powerful forces behind the financial system will never allow gold to return as real money. Instead, he says every new technology, whether fiat, Bitcoin, or CBDCs, is another proxy. Hunt warns that this trust has already been badly eroded, exposing the fragility of the system. FrancisHunt points to a massive opportunity with long-term targets near $330 and a nearer milestone around $100. Hunt emphasizes that while gold may guide its pace, silver's setup signals one of the most significant breakouts in decades. In the last 5 years, silver and gold have shown different paths. Silver's price has been more volatile, with bigger potential gains. Examining annual returns from 20 to 24, silver outperformed gold in some years. This was due to industrial demand and tech advancements. For example, in 2022, silver's return was significantly higher than gold's, largely due to its increasing use in renewable energy. Let's get back to the interview.
The people that are orchestrating this system behind it, the dark forces, names you don't even probably know or that you might only suspect, are never going to give you your own money. And gold is a keep you honest system. They don't want that. They entrench their power by virtue of controlling money supply, and it's not one they intend to give up. So the typical game is they install. I was listening to somebody, and he was making the case for Bitcoin and why my criticism of his Japanese imaginary friend superhero that came to save him with the Bitcoin creation is a false construct. He said, well, it's the first time, and this is happening for the first time. And I go, no, the Chinese invented the printing press. We had gold, and then we got printed fiat, and that was new technology back then. It was paper printed with a very unique stamp, and you said, this is in lieu of that. And then they tried to bypass the value of base money, gold, onto the fiat. And that was new technology, and it was crazy, and it was amazing. It was basically blacksmith's IOU notes, the big guys that shoed the horses, who were holding more gold than anybody ever up at one time and could dish out more IOUs than there were gold. And that is always, a fractional reserve system is always the intention to maintain. And Bitcoin and CBDCs are going to become the new, but but it's technological, it's more convenient, all of this. That's the new derivative proxy that gets inserted in between the real money, which is the base physical metal. So you're going to be always sold an incredible technology and incredible this and incredible that. It's different this time. It's so different. It's always so different, to get you to put faith into a proxy that is based off of a base money that they later sever the tie for, and everything becomes entirely faith, which is fiat. Hence, fiat comes from a faith-based system. We say that note is worth a certain amount of hamburgers or meals or potatoes because of everyone accepting the price for that good, and that note being passed around will secure you it. The problem is the faith has been undermined. The debt is collapsing, too much fiat, and we're at the end of such a cycle. And part of their job to rinse, repeat their continual scam is to get participants to develop faith in some new derivative proxy rather than the original money. And that's where CBDCs come in, and I think they will be doing it now. We're saying bankers with this, and we can do that, and you can do this, all these features and all of this. It's going to be a technological whiz-bang, and it's no more than the printing press that the Chinese printed and a piece of paper having printed on it. It was new technology once back then too. People didn't have prints, the ability to do printing and clean white paper as easily available. And fiat note was a wonderment. It's beautiful, and an IOU, and it's backed by your government and backed by this. Don't put your faith in the same criminals, because they will sell you the same scam, just with a different flavor, a different tune. We highlighted when you first tripped the wire on the main pattern, but actually we were already in long leveraged, and you'll stop there. And the gain is up to $330. That's a huge, huge move. This is, as I say, a very big time frame view. It's a massive risk reward, 23.91, my apologies. 23.91. But if you had actually got in here, it's actually even better too. So we were saying, look, this is the point for longs. This is some time ago. We were on your show talking about this. And we've done this divided by the CPI AU CSL as well, which is the alleged inflation rates. Let's just get that risk reward. So this is an amazing chart. That's where you can see 1st of Jan 2025 was the first time you broke the green line, the triggering event for us. And since then you're up, and you're up at 44.15. I point out that there's a kind of 47, 69, 48 blue line here, which runs through those highs. But it shouldn't be, if it has a pause, it shouldn't be excessive. And it's not guaranteed that it will. It's run our first interim target. The next target is up at $90. People will be looking very forward to that, because they'll be on the doorstep of 3 digits. And then we're going a whole next level of up. Again, just bear in mind, having just run that first interim level target, the remaining few days of the month, we could come a little bit back. As I mentioned with gold's the king, and silver still needs to be permissioned to run by gold to a degree. It will independently run to a degree, but not too much. If gold comes off a fair amount and starts to be a little bit staid and a little bit more lackadaisical for a while on price behavior, then silver will slow. And the $50 gateway is a very important point. We talk a couple of times, we use our catchphrases with you once, twice, and then on the cup and handle part 3 times. And then we say the 4th time is the lady, the one that breaks. So we could still see the possibility that when you get into this range where you were rejected here, those wicks, you can see those are rejections, that you might get a similar degree coming in the early weeks of October, maybe a bit of a rejection. I don't think it goes far. And I think then you go again, and then that's the big break. That's the one that will take you into triple digits. And we are pretty high confidence on this. It's a good setup. It's a long-term setup. It's one we've been watching for absolute ages. You could have been long from 30. You would already be now $14 to the good. That's almost 50% on your leverage trades if it's 45 in a few weeks. And you would have had a SOP. And if you had started down here, you would have been in even sooner. You would have been in the 28s, 29s, and your stop would be even tighter. So you are in a breakout, fast-moving HVF trade in silver, and our expectation is 330 will be the next major target resting place for this time frame under review, which, bear in mind, is a very macro time frame. So things unfold slowly if you're watching it day for day. But when you look back over the months, you go, wow. A bit like when I was showing you the gold chart on that quarterly time frame. It's just mainly up, really. Even with the periods, the 3 years since 21 where we went sideways, it's mainly up.
Looking ahead, both metals are expected to do well, but they grow at different rates. Gold is seen as a safe choice for long-term gains. Silver may offer greater gains or losses due to its volatility. Silver and gold are top picks for investing in precious metals. But which one is actually better? Are we prepared to face a world where faith in fiat finally gives way to the enduring value of gold and silver? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.